This is the last day for the current pricing for the applied level. So I thought I'd take you through a walk of what the applied level has. We're up to about 160 hours of content with about 80 to 100 hours planned for the year, along with some PDFs. I'll show you what the PDFs look like. So the progress on the applied level is really coming along. This is the last day for the current pricing, beginning January 23rd, 2025 at 9 a.m. New pricing goes into effect because it's just getting bigger and bigger. The applied level, the whole applied level right now is 440. If you have any CFA status at all, level 1, level 2, level 3, charter holder, you have the opportunity to upload your documents. You would get $120 off that price. It drops to $320 from $440. And this is the last day also for the perpetual membership, which means once you buy it, you have lifetime access to everything in it and all the updates from here to, well, as long as you have it. Starting tomorrow, the price, the applied level splits into two. One side will be about analysis, another side will be about asset management, because that's really how CFA divides its content. Level 1 and level 2 are really focused on analysis. A lot of analysis at level 1, a lot of valuation at level 2. And when you get to level 3, the focus is more on portfolio construction and portfolio management, which falls under asset management. So we've aligned the applied level to sort of match those two sides. I'll explain the pricing of that as we go on. But starting tomorrow, rather than lifetime access with all the updates, it would be 1 year access. And after 1 year, you just wouldn't get the updates. You'd have perpetual access to everything you have. You just wouldn't get any updates. There'd be a small recurring fee per month to have the updates. I'll explain that in more detail. But just to give you an idea of the size of the applied level in the 3 years since it's been launched, why don't we walk through some of the sectors, and then I'll talk about what the pricing looks like tomorrow. Let's start with sector studies. This is the big centerpiece in the applied analysis side. There are 11 sectors to the economy: consumer discretionary, consumer staples, materials, etc. And in each one, there is a video describing the characteristics of the sector, the economic drivers of the sector. So we see one here for consumer discretionary, one here for materials. Consumer staples has one. We see one here for financials. And then there are sub-industries. Within each sector, there are industries, and then there are sub-industries. So for some of them, I go into detail. So here is a bottom-up analysis of a home builder, D.R. Horton. And you can see this one here is about 4 hours. And then a video to understand automotive OEMs. So this is a sub-industry overview. This one here is almost 4 hours long. You can see how long it is over here. 97 hours is dedicated to the sector studies, and that's only going to increase over time. For materials, we have understanding mining, which is really focused on copper mining, and we have understanding gold mining, and a walkthrough through Freeport's 10K. In their financials, I have a video here for agency and agency's 10Q. The big part here is the 5-part series on understanding banks. And if you go down at the bottom here, we have a 3-part series on understanding the Federal Reserve, understanding how it conducts repos and reverse repos, understanding what reserves are, and then understanding the full Fed balance sheet. Real estate, we cover quite a bit. Understanding residential REITs, there's a little over 3 hours there. And then I go through some of the other common REITs: retail REITs, office REITs, industrial REITs, and timber REITs. Under utilities, we have understanding electric utilities. We have a top-down section that's growing. Economic reports, this is a deep dive into each of the economic reports and what kind of data we can expect to find and where we do find it. And I focused right now on what is most important to us right now. CPI, PCE, and jobs. That is the economy right now. That is everything, because that will give us some insight into what the Federal Reserve will do. I'll be expanding that out this year into retail sales, durable goods, GDP report, industrial production, and imports and exports. If we're going to have tariffs, we better know what's in imports and exports and how to read that. So those become important. So those will be added to the economic reports. Energy sector, understanding the oil and gas exploration and production. For information technology, understanding semiconductors, understanding cybersecurity, and we do a walkthrough of Palo Alto's 10K. And understanding Bitcoin mining, and here we do a walkthrough of Riot's 10Q, and it should be up now, but Mara, we do a walkthrough of Mara's 10Q and some of its investor presentation. Healthcare, the pharmaceutical supply chain, we look at manufacturers, we look at the distributors, and then we look at the pharmacy benefit managers. So it's a three-part series for healthcare. Industrials, ocean shipping, we have in here, and we do a walkthrough of three different ocean shippers, one in oil tankers, one in dry bulk, and one in container shipping. Those are the three big types of ocean shipping. Communications, understanding telecom, and we'll talk about financial modeling in a second. The other thing that I'm adding in to the sector studies, and let me see if I can find a couple of them and drag them on the screen for you, is here are the first drafts of the chapters. A book will be developed over time. You'll be getting these PDFs. And every time I do a sub-industry, an understanding of a particular industry, there'll be a chapter that's included. There are, I believe, 163 sub-industries. So there's a long way to go. I think I've done about 12 or 13 of them now. So this one here is our first draft, 33 pages. It's a little over 10,000 words, and it just is a description of the industry. If you wanted to invest in cybersecurity stocks, these are things that you're going to want to know. This is the language that you're going to need to know to understand cybersecurity. And let's go all the way to the bottom here. And look what we got. All right, you got a whole bunch of questions, and I will develop more of these as well. This is our first draft of this one, Understanding Cybersecurity. Let's drag this onto the screen. Here's our first draft of Understanding Bitcoin Mining. And again, if you scroll right to the very end, you will find that we have some practice questions as well. This one here is 33 pages as well, 9,400 words. One more, how's that? Here's the first draft of Understanding Automotive EMs. So we're trying to develop textbooks around this. That if you wanted to get up to speed on a whole bunch of industries, sub-industries really quick, you say, well, I want to invest in a Bitcoin miner, some cybersecurity stocks, some telecoms. This will help you really understand the industry so that when you're looking at a company, you can understand the sub-industry that it operates in and what are the economic drivers of that sub-industry. And here you go again. We have our questions at the very end. Modeling it along the CFAI sort of presentation for the readings. Okay, so let's jump over to financial modeling. In CFA Level 1, you do have a practical skills module for financial modeling that's done by Ian Schnur. And he's pretty good at that. The only objection I have to the module that's presented is it uses manufactured data. So it's really heavy on the presentation of financial modeling. But it doesn't use real-world data. So it fails, I feel, to bring together the analysis with the modeling. So I present the financial modeling module here using Costco. We use real-world data. So it brings together the analyst's role and the financial modeler's role. You can see this is 17 hours here. And we go through everything, entering the historical data, the revenue schedule, the cost schedule, the working capital schedule, the fixed asset schedule, the debt and interest schedule. We handle circularity, the income tax schedule, the equity schedule. And then once you're done, what do you do when there's a new year of data? How do you update that model? I show you how we update the model. This is a full walkthrough if you were doing a sell-side report on Costco. This is part one. This is the financial modeling part. In a couple of weeks, part two starts, which is the valuation part. So everything here that we go through, you should be familiar with all of the language and all of the steps through level one, especially level one FRA. Should get you very familiar with all of the language and all of the statements that we're going to be working with. Level two is a valuation level. So part two of financial modeling is the valuation part, and we'll be using a number of valuation techniques to value it, discounted cash flow being one of them, being only one of the techniques that we use. There are 3 valuation methods we'll use for Costco. So there's a part two coming. This is really to introduce you to what a sell-side financial model would look like, an analysis and a model. The buy side, on the other hand, really doesn't care about a lot of stuff. It really cares about making a purchasing decision. So when we do financial modeling for the buy side, we will use the same financial modeling techniques, but there's a lot of line items on the balance sheet that often the buy side just doesn't care about. The balance sheet oftentimes is a result of the business that the company is in, as opposed to being a driver. Some things are drivers, especially the asset side, but a lot of line items are just results. We don't really care about that. So when we do buy-side financial modeling, we're concerned about getting to a valuation decision in a rather quick way. And depending on the type of portfolio you're running, you don't have time to do a 2 to 3 week deep dive on every single company. You need to screen a bunch of companies quickly. You need to identify a couple that you're interested in, and then you need to work quickly and efficiently to get to a decision. Whether it's going to be, okay, I've gone far enough, this looks good, let's go. Or I've gone this far and no, I can see I don't like this, there's no point in me going any further. So we'll look at buy-side financial modeling. I used CAPREIT, which is a Canadian apartment REIT. And we forecasted funds from operations, and we really just looked at the valuation as a multiple of funds from operations to decide whether or not this is something that we liked. I'll add more companies from a buy-side perspective here. So there's the financial modeling and the sector studies. Together, they add up to the applied analysis. As of tomorrow, the applied level is splitting into 2. One is going to be applied analysis. So when you subscribe to applied analysis, this is what you're going to get. You can expect that there'll be more additions to sector studies and more additions to financial modeling, and the introduction of PDFs or chapters, we'll call them, to go with the understanding series. I expect the final drafts to be ready sometime mid-year, near the end of this year. But we've got the first few initial drafts done. Now it's just a matter of updating them. Let's move on and look at what the applied asset management side consists of. You get applied options with that, and there's it's without using options. I would say that as asset managers, your job would be challenging, because a portfolio is not a collection of securities that will provide you with a return. That's the wrong way to think about it. A portfolio is a collection of risks. You can't manage the return. For example, if you are a long gold, gold will be what gold will be. You can attempt to forecast a price for gold, but there's not much you can do about the price of gold. It will return what it returns, but what you can do is manage the risk exposure you have associated with gold. A portfolio is a portfolio of risks. Options are an excellent risk management tool. They're an excellent tool to take on risk, and they're an excellent tool to lay off risk. So without having options, available and being very well schooled in what you can do with options, you may end up with long-only portfolios that end up with either not enough risk exposure or too much risk exposure. So you should know these strategies. So there's a bunch of income strategies, covered calls, some spreads, iron condors and butterflies, directional strategies, the synthetic long and shorts, cross security risk reversals, call ratio back spreads, decisions of whether using stack or strips in your strategy, rolling your short puts, volatility strategies, gamma trading, skew trades, and we do have some on, because there are options on futures, we introduced just the broad futures. These are great for risk management. If you've got a portfolio of equities and you're worried about the risk of the equities, rather than manage the risk of each equity position, you can manage it globally with futures and options on futures. And same with your duration, your fixed income part of your portfolio. You should understand treasury futures. And then we have interest rate futures as well, which is the short end of the curve. This is the longer end of the curve, and that is applied options. Then we go to portfolio construction and management. We'll talk about positions in a second. It starts off with setting up your screens. We set up a buy and hold allocation. We do a theta allocation. Theta is an income strategy using options. It relies or depends on earning income from the decay of time value. We set up screeners to screen for certain criteria we're looking for in stocks. We'll use momentum strategies, and here the simplest momentum strategy is using the 52-week high and low list. You can use a 26-week or a 13-week. It's one way, just one way to play momentum. A theta extension, we do allocation factories. A carry trade, this was a carry trade between the yen and the US. Portfolio construction, we for some Forex. Rebalancing, when it's time to rebalance the buy and hold portfolio. This is portfolio management, loss reduction to elimination. If you have a position that's in a loss position and you say, well, I'm just going to take the loss now, I would say, whoa, hang on. Maybe there's a way we can make the loss less. Can we minimize the loss with a couple of strategies? And here it relies on options. That's why having options is important. Think about your portfolio and think about the biggest loss you took in the last year. What if there was a way that you could have just reduced that loss by just 10%? Not eliminate it, but if you could have just, rather than take the loss right then and there, do something else that would have just resulted in the loss being 10% less, where would you be, right? Rolling your options, setting up an equity market neutral trade or an equity market neutral portfolio. Here we're going to replicate an ETF with the underlyings, buying duration to replicate an ETF. Some work with commodity futures. If you have currency risk, how would you hedge that currency risk? Short selling. This, I think, is going to become really important this year because I expect heightened volatility through 2025, which is frustrating. Because some days you're up, then you're down. Then you're up, then you're down. Then you're up, then you're down. That's frustrating. So this is volatility trading by benchmarking to an option. And that is in the portfolio construction. And you do get positions. Positions, I should explain, this is my positions. So every week I put up a video. Half an hour to an hour, depending on what I have to talk about. And I go through each of my positions. I go through the thinking that I'm at in terms of those positions and what I'm doing. If I need to manage risk, if I need to take losses, if I want to increase my exposure, if I'm adding new positions, why am I adding that particular security? What do I see in it that gives me the reason why I want to add it? So this is not so much to give you ideas for what you should be buying or selling, but giving you sort of an idea of the thought process involved in coming to a decision. And I add to this every single week. So every single week you'll get an update of that. So with that in mind, let's go look at what the newer pricing is going to look like. I'm going to start with the level 1, 2, 3 plus version, level 1 plus. Whenever you see the plus it means it includes the applied level with it. So there's our pricing for level 1, level 2, and level 3, 719, 749, and 789. I've also, for comparison purposes, put Kaplan and UWorld down in terms of level 1, 2, and 3. You can see we're all sort of in the same price. The only difference is when you pay Kaplan 749 or UWorld 799, you don't get the applied level. Our level 1 is more than comparable with each of these, plus you get the applied level. I say more than comparable. I would, I'm a little proud about our content. I'd say I think it's a little better. But the big thing here is you don't get the applied level. They don't have the applied level. So you're basically paying the same price with the competitors, but losing 160 hours in the applied level. No other provider has the applied level. It's proprietary to markmeldrum.com. And I would go so far as to say I think that both Kaplan and UWorld would be very challenged in presenting an applied level, because you need a practitioner, not an instructor. You need somebody who's in the market every single day, and I am. So without having that practitioner part of it, I don't know that a pure instructor could get it done. So let's just go through them. Level 1, you're going to get the CFA content for level 1, level 2, level 3, and you have access to that content to the exam window, and then it's archived after for 3 years, something that is not done with any of these guys. You simply just lose your access. We retain your access so that after level 1, you move on to level 2. And while you're at level 2, you're saying, oh, I forgot this part. Well, you can go back to the level 1 content, the archive. It is available in our app. You can download the video into the app, and you can refresh from level 1 some parts that you needed. I think that's important. When I was in university and I went to year 2, I kept my year 1 textbooks, because sometimes you had to refer back to something that you should have known in the first semester or last year. There it is. I kept my textbooks. I never resold them. So this is the same thing. It's like keeping your textbooks, except they're your text videos. Well, I guess they're video videos, not text videos. But you get to keep them for 3 years. You also get the applied level, again, which is not included down here. So they don't have the archive, they don't have the applied level. And right now, this ends today, by the way. This pricing ends today. I'll show you what happens tomorrow. When I say it ends today, you have till 9 a.m. January 23rd. And as I do this, I'm looking at the time right now. As I'm speaking, it's 10:19, January 22nd. By the time this hits YouTube, it'll probably be like 11 o'clock. So you have some time to get this done. You get all content for the applied level, all updates. Access is perpetual. There is no expiration in this. The implied cost is $320. Instead of the $440, it's $320 because, well, if you're buying it with level 1, level 2, or level 3, you clearly have some CFA status at that point. So you get a $120 reduction. It comes down to $320. Let's have a look at the structure tomorrow. Okay, so this is what I showed you on the previous screen. Beginning 9 a.m. January 23rd, which is tomorrow, level 1 goes from 719 down to 675. Level 2, 749 drops to 705. This 789 to 745. This is for the plus. What is going on here? The implied cost for the applied level up here is $320. But as of tomorrow, the applied level splits into two: applied analysis and applied asset management. The implied cost for the applied analysis will be $275. So you'll get one of them. Let me show you how this works. And we've lined it up to match the CFA content. So while you're going through level 1, I don't see the point in including the applied asset management, because there is no asset management at level 1. It's mostly analysis. Level 2 is mostly valuation. So the applied analysis is more important to have at that level. For level 3, if you take the level 3 plus, it automatically defaults to applied asset management. The cost is $425 for applied analysis and 425 for applied asset management. However, because you're taking a level 1, level 2, level 3, if you're somebody else's subscriber and you can demonstrate that you have some CFA standing, we take $100 off that price. So as soon as you say, hey, I'm a CFA candidate, well, there you go. It goes down to $325. If you are buying it through us, if you're taking your CFA course through us, you get another $50 off, so there's $275 in the price. So rather than $320, it drops to $275. $275 will get you applied analysis if you take the level 1 plus. If you are new to us at level 2 and you take level 2 plus, you'll get applied analysis. And if you're new to us at level 3 and you take the plus, you'll get the applied asset management. Now, this does not mean that you can't get applied asset management. You can add applied asset management for $275. I just don't think that it is time at level 1 to add that. I think focus on the analysis first. Focus on that. Before you go shopping for stocks to add to your portfolio, do the analysis first. You'll be a better buyer of securities. So if you did level 1 and you added applied analysis, then you moved on to level 2 and you took the plus, it would automatically default to applied asset management because you've already got applied analysis. If you then moved on to level 3 plus, you couldn't take it because it would say, well, you already have applied analysis and applied asset management. I can't let you buy the same thing twice, so you wouldn't have to at level 3. For non-CFA for non-Mark Meldrum subscribers, the price is $425 minus $100 if you have any CFA status. I'm also extending it to any FRM status, and of course minus the $50 as well if you are doing FRM through markmeldrum.com, and any CAIA status. And is that a preview of something to come on markmeldrum.com? I don't know. But if you have any of this, but you're not a markmeldrum.com subscriber, but you can demonstrate you have some CFA, FRM, or CIA status, you get $100 off. So the applied asset management would only be $325, applied analysis would only be $325, and if you are markmeldrum.com, it drops to $275 on each of them. This starts tomorrow at 9 a.m. So right now, it is an extra $320 if you're buying the level 1 plus, level 2 plus, or level 3 plus. It is $320. You may say, well, why don't I wait? It drops to $275. This is $320 for the whole thing. This is $275 for each. In other words, it would be $550 for the whole thing as opposed to $320. You get to save $230 if you plan on adding both modules over time. If you did it today, you get to save $230. It's exciting. We have a lot of content. If you think about the cost per hour, right now we have about 160 hours over the whole applied level. From portfolio management, applied options, sector studies, and financial modeling, we're at about 160. The plan, just on what we're adding over the next few years, is somewhere between 70 and 100 hours every year we're going to add. So if you think about the cost of what you're paying, is somewhere around $3.40 per hour of video that we have right now, plus all the hours we'll be adding over the next year for free, if you think about it that way. So there we go. If you have any questions about the applied level, just hit the comment section below. I'll monitor it over the course of the day, and I'll answer whatever I can. Oh, I forgot one thing for the applied level. It is at this moment getting a Discord server built for it with a bunch of interesting video and text channels so that there could be a nice big open forum. We have well in excess of 10,000 subscribers on the applied level. Let's get them talking. Who knows what kind of great conversations can come out of that. And then there'll be some video channels in there, some text channels, so that at certain times I can, especially around Fed meetings, I can just share my screen and I can show you what I would be doing in positioning during the Fed meeting based on what they're saying. So it opens up a whole bunch of great avenues of things that I can do that are difficult to do on a site. So we're going to get, the applied level is going to get a lot more interactive going forward. That's being set up right now. It's going to take a while because it's just a lot of thinking that you have to get through. But within, I'd say, about 3 weeks, in about 3 weeks, 4 weeks, we should have a beautiful Discord server set up. That would, access to the Discord server would come with a subscription to the applied level.